have one more speaker, Ms Bhawika Wanchoo, and Mr Gautam Pal. So, our moderator is Mr. Prasanna. I'll just hand over. Yes. Now to take it over. Thank you so much.
Thank you so much, and great to be part of this field management conference. The topic is quite good. The economy is getting driven in the banking ecosystem. It's not only banks, but now it is being supported by FinTech companies. Primarily, how we have seen banking or capital market last 60-70 years, and last 10 years is altogether different era. Maybe because of changes in technology, maybe because of change in the customer experience, and that's how FinTech has taken that opportunity. While bank or capital market had those opportunities, the FinTech has now becoming one of those primary channels, apart from mobile, internet, riding on those APIs provided by regulated entities. And last post-COVID and before COVID, we have seen again altogether various differences in the customer experience. Maybe everything is going digital, and last 2 years when we talk about ChatGPT, it was one of those path-breaking buzzword which has helped to make AI as a normal technology from the emerging technologies. We could see the type of companies or FinTech in the last 2 years riding on AI or in a different kind of trading model. So we'll hear from both of us, from Gautam and Bhawika, how the trends are changing, how is the behavior in 20 years, how they have seen the behavior of this change because of FinTech and because of technology. And from there on, we will talk about the financial models, how financial models are changing, what are those opportunities FinTechs are looking at, or how they have helped the ever-changing customers. And we'll talk about how is the future is all about, and how future is good with regulatory support. And as we come from Ahmedabad, the nearest gift city, we talk about various opportunities in a gift city under FCT IFSC, where IFSC, which is a unilateral regulator, which is driving a lot of opportunities. So I'll talk with ma'am. Ma'am, you come with such a vast experience, and now you are part of a gift. So if you go back maybe 10 years, 12 years before, how things have changed, maybe from there we can start building the story for next 30 minutes.
Sure, thank you. So let me just start with, I come from an era when mouse was still a creepy little chuha and windows were khirkis, right? And in my college, my computer lab was less of a venue for learning and more of a venue for, enjoying the chilled atmosphere, particularly in Rajasthan. No, sir, do I mean to say that I'm old? Please don't think that. I'm simply wanting to establish my credibility in saying that I have actually witnessed the evolution of FinTech. And here I would differ slightly. I will not refer to it as FinTech. In honor of the event that we are here in, the technology event, I would refer to it as TechFin. Essentially, FinTech and TechFin happen to be the two sides of the same coin and happen to be the means of achieving the same end. So, FinTech or TechFin is something which has impacted all of us on our personal fronts. I will talk about that first, and then I'll come to on the professional front. On the personal front, I remember days, when I would have to skip my lunch because I needed to withdraw money from the bank, right? So those were the days when we had mandatory visits to the bank for our banking transactions, and now are the days when everything is available to me on my computer, on my laptop, on my phone. So I don't think any of us would remember when we actually last visited the bank. So as I speak today, the online transactions in India from financial year 13-14, in terms of number of transactions, has increased from 220 crores to more than 18,000 crores. And if we were to talk about these transactions in terms of the value of those transactions, this would come from 950 lakh crores to around more than 3,000 crore value transactions, right? So this is something which has impacted each and every layer of the society, and finance being the mainstream of human life, right? So FinTech is something which has actually helped us, affected us in our daily lives. Coming to my professional life, I have spent a significant part of my career in the capital market industry. So again, to take you back 20 years, I remember the days when, in our innocence, I would not call it ignorance, I would call it innocence, when we were working on the Excel spreadsheets and inadvertently, while sorting the data, we would miss out taking some rows, some columns. And you know what would happen? Debits would become credits and credits would become debits. And how would we come to know? Poor investor coming running to our office, अरे मैडम क्या कर दिया? पैसा लेना था आपने तो पैसा उल्टा डेबिट कर लिया हमारे अकाउंट से, right? And not to mention the sleepless nights that I've had, because I was responsible for manually calculating the interbank transfers for payments to happen, for settlement to happen. और रात में मुझे नींद नहीं आती थी कि मैंने एक ज़ीरो कम या ज़्यादा तो नहीं लगा दिया while entering the transactions. And the repercussions would be अगले दिन settlement नहीं होता, and it would be a big news on the media, आज National Stock Exchange में settlement नहीं हुआ. But God was great, ऐसा कुछ हुआ नहीं, otherwise आप लोग को शायद मेरा चेहरा याद होता. So what I'm trying to say is that we have actually come a long way from there. From there we moved, so those days were the days of call and trade. Investors would call the dealers, भैया जरा 10 रिलायंस बाय करना, और डीलर बेचारा प्रेशर में आके 10 रिलायंस बेच देता था. Those were the days. So from there we moved to internet trading, where investors entered their own trades. We moved to a lot of automation, and today we are in the space of algorithmic trading and high frequency trading, which has actually presented a lot of opportunities to tech fin companies. So today I know a lot of, fresh graduates out of IITs who have left their core areas, and they are leveraging technology and data to formulate their own algorithmic trading strategies. And they're doing a very good job of it. So in terms of the technology, even if we were talking of my own company, I have always seen, though we are a financial services company, we are a stock exchange, but in terms of the employee strength, my technology employee strength has always been at least double of my finance competence strength. Today also, I work for National Stock Exchange, International Exchange in GIFT City, which is a startup exchange. So in terms of number of employees, we have around 61 full-time employees, but against those 61 employees, we have 145 IT vendor staff. So that should tell you that what are the opportunities that are presented today in terms of the tech fin space. And are we at the end of it? Definitely, I don't think so. Because today, India has the third largest fintech ecosystem in the world. And this is poised to grow at least 30% CAGR till 2025. So for tech companies like us here, we have a lot of opportunities. And why go far away? Why not speak of GIFT City itself? In the Union Budget 21, our Honorable Finance Minister announced the setting of a world-class fintech hub in GIFT City. And so to that extent, our regulator in GIFT City, which is the IFSC regulator, is providing a lot of incentives to technology companies for them to come and test their innovative products and strategies in the sandbox mechanism. So we have various types of sandbox available, be it the financial innovation sandbox, be it a regulatory sandbox, or be it your interoperable regulatory sandbox. So you can come and test your innovative strategies there. So from there, you can also, now we are seeing a logical progression of TechFin to RegTech. That is the regulatory technology. Given that regulators world over are becoming very, very powerful in terms of being very cognizant of, avoiding any kind of frauds or scams in the market. lot of regulatory compliances are being enforced on the financial companies, and it is the technology companies which help us to comply with these regulatory compliances by way of RegTech, right? So last but not the least, we have progressed to SupTech, which is the supervisory technology. Supervisory technology being the technologies which help the supervisors, the regulators, to ensure that fair dealings are happening in the markets. So there's a lot to come. I think I've already utilized my time. But yes, there are a lot of opportunities for us to be exploring. Thank you very much.
Awesome. I think the way we look at back in maybe 90s and 2000, 2008, 2016 and now, it has been up and up, right? As I said, 90s we used to go and visit bank branches. And at the same time, we used to do manual calculations in the back end, maybe trading or maybe the banking reconciliations. Post-internet era, I think what we have seen, things have moved from internet to mobile banking, and after 2007-8, where we have seen Android and iOS gaming, so banking has moved to mobile banking, where at the same time, backend also a lot of automation has started. Post 2016, with the geo momentum data, and now banking has moved away from mobile banking to gone into FinTech. So with the help of API banking, which is one of those interfaces where all the services which bank branches are providing or mobile banking, same thing, FinTechs are also taking pie of that. Maybe just imagine bank is a one building of maybe 12 floors with all different banking functions, retail, corporate, trade and all. So these floors were taken by FinTechs as a rent. Yeah, I will do it for you. And that's how the banks are now doing much more modern. This is the story 2024. What is going to happen in 2030, 2040, that will decide how 5G will become 7G. It's not only the human beings, maybe devices or maybe different FinTechs we will see. But I think projecting financial models, how businesses are happening, how do we really take care of finances altogether is going to be the same. Methods may change from manual to automatic. And we have a Gautam ji also, which he will talk about his experience. And good to see that, ma'am, you spoke about past, what is happening now, and how regulatory is so innovative. Imagine 4 or 5 years before the IFSC was not existing. And today they have given us such a platform for FinTechs to come outside of India to come and operate there, or some of the FinTechs who are operating in India, how they can do ease of business outside. I think today we hosted a very good FinTech roundtable with 25 speakers around at all academia, industry, real estate, banks, FinTechs, and such an enthusiasm to see how GIFT City can become something like Singapore. Because Singapore is a small scale, but at India we can look at how GIFT City can become a very good GCC. So Gautam ji, over to you. You come from that background, which you must have also seen in your stories.
Thank you, Prasanna. So I'll start with my journey on the FinTech side. I started my career in 2009, right after my MBA, and I was working in a finance firm. And to us at that point in time, the holy grail used to be that you have to punch in the numbers in a spreadsheet by yourself. Because till the time you don't do that, you don't get a hang of, what the ratios would look like, what the output would look like. Cut to 2016, and we're talking about an era using technology wherein all these numbers could be updated automatically using various formats, some XBRL, some OCR, etc., etc. And post that, so that was the first point wherein my brush with FinTech came in. And trust me, there was so much skepticism, not only in me, but in the organization that I was working in and leading. Everybody used to say that a machine will not be able to read the balance sheets, update the numbers in the right format, at the right place. So if we are taking 2 hours to do this job, once the machine does it, will take probably another hour or so just to reconcile what is happening. And there will be so many errors, etc., etc. Cut that 2016 to 2024 today, and the era has evolved, the technology has evolved so much, wherein from a primary data population kind of a solution, we have moved to an analysis. From an analysis, we have moved to the next phase, which is basically, understanding and decision making, right? So this is the entire journey that I have seen. the beauty of this journey is that there's a very famous word which is like democratizing democratizing a particular action or a particular trend. So I think this is what FinTech has done. The FinTech at one point in time was used by the big banks, by the big hedge funds, by the big investors. Now the evolution of FinTech, both on the technology side and as a result of that, the availability. Today, in the small and medium enterprises, now in my role as a consultant to various large companies and to evolving companies, particularly in the conventional business of manufacturing, I see FinTech getting used. The use cases are now so diverse. It could be from vendor due diligence to doing a financial modeling to understand what is the kind of risk that company is carrying. A promoter always knows what is the kind of risk that he is carrying in the business, but it has now become possible to quantify that risk using financial models which are built on deep tech. Also understanding what is the kind of growth that the company could take basis whatever is the basis the modeling the models which are available. So I think FinTech has not just transformed the industry, and therefore I would also agree with ma'am that it should not be FinTech but it should be TechFin, because it has not just revolutionized the finance industry, but it has revolutionized every other industry, right from our personal banking requirements to how companies foresee their future plans, how they project it, and and how they're able to monitor their risks. So, and I believe that going forward, this, with increasing compliances coming in, with increasing, governance, because now a lot of companies which were small until yesterday are thinking of going public. So, they of becoming listed companies. So they will all require a lot of strong technology background and backend to be able to navigate this entire growth journey.
I think you touched upon your experience plus how slowly risk modeling or compliance is very, very important. While FinTech brings a lot of wow factor, experience, and out of enthusiasm, they use various tech stacks and do those outputs for the end users. But at the end of the day, they are backed by regulatory entities, could be capital markets, could be banks. And banks and these guys are sitting in a glass houses. Right? Anything goes wrong, as Pam said, it becomes in the news, right? And then it takes a lot of time to really recover. So it's always good to have a good regulations base, and this is what RBI, which is one of the best regulator, or SEBI or IRDA, keeps doing, or keeps revising those existing regulations to the next regulation. And good to see that how these regulations are supported by tech. The way we used to create regulations, now we take care of AI or blockchain or some of these deep techs, which revives the regulation and ease out the regulation or the nose thing, and we are ready for something else. But as you rightly said, if we build new technology comes with its advantages as well as risks. So ma'am, we would like to understand from you, right, based upon your experience, while these fintechs are there, what are those opportunities, and while serving those opportunities, what are those risk related pointers they need to take care of there?
See, as I said, finance in itself has inherent risks. So whenever you're working in any financial services industry, because you're managing somebody else's money, or for that matter, your own money, so there are inherent risks involved in it. And to cater to these risks, we have a regulatory landscape for mitigation of those risks. So this regulatory landscape, compliance with this regulatory landscape can to a large extent be aided by technology. But having said that, that human element, that human experience is always there, which will always be required to assess the data. See, you may use, and in fact we are using, as a use case, we are using a lot of AI models in our surveillance system, right? But day end, we do have people available to look at what that AI model has thrown out, right? So no doubt, with increasing regulatory landscape, particularly given the Indian scenario, unlike international markets wherein it is a more of an institutional driven market, there are accredited informed investors in the market, right? But here in India we have more of retail investors. So the role of the regulator becomes even more important, because the investor protection is at the heart of the regulatory landscape. So to that extent, yes, technology does help, and it has to be. And drawing a with what Gautamji said, that earlier, it were only the large companies which were leveraging the use of technology and getting a benefit out of it. But today, even a small company, I'm talking of a small broking entity, cannot think of setting up a business using technology. So technology is embedded and integrated in our day-to-day operations. Having said that, but we do need financial expertise to actually mitigate the risk. I hope I've answered your question.
Yeah, and what are those risks? Like we spoke about those risks, and I spoke about two very good and important entities, RegTech and SupTech, right? So, wherein for benefit of people or audience of RegTech are those automation companies who can really do the better regulation. Helps, like maybe backed by AI, how to really bring out those reports which needs to be submitted to regulators. Or there could be account opening which was on paper based, how it can be done with the help of video KYC, e-KYC or OCR. So RegTechs are those companies who will utilize those technologies and do the regulatory operations which are required by regulators. And supervisory tech, as you rightly said, it is used by the supervisors who are auditing, who are doing risk analysis. So how they can utilize this technology so that ease out their manual operations. So I think, so Gautamji, what are those risks which typically fintechs are failing? I think we had some of the core NBFCs has stopped their operations. How could they have stopped? We could have stopped it with the help of a good financial monitoring or kind of a monitoring monitoring. Yeah.
I think my view here is that typically, if you look at the evolution of lending in India it was always asset-backed lending, which is now moving towards cash flow-based lending, and this change is being done, it is happening because of FinTech. So therefore, there are the models, whichever have been, the models that have been built on past data. They have been tested on the past data and what has happened in the past. But as you move forward, the market conditions change and therefore the use cases change. And therefore, you could have a situation which you could never have stimulated in the past, right? And those are those like the black swan events which typically lead to the problems because of which certain people have either loss of control or loss of capital. These are the only two instances because of which a lender will have to stop lending. Loss of control means that you are unable to control your processes and because of which you are unable to initiate recovery of the money that you have given. And loss of capital because loss of capital comes from loss of control, wherein you have to take the hit onto your books. So I think what we are seeing right now is more of loss of control rather than it becoming loss of capital. The action that the regulator took yesterday was more to ensure that the loss of control does not convert into loss of capital. Similarly, this is, the question could also be extended towards the risk that come from from a fintech model. Like ma'am said that the model would throw out would give an output, but that output would always be read and interpreted by a human before it is converted into an action. We have seen several instances wherein the early warning signal, signals have been used, have been put in place by lenders, bankers, and other financial market players to figure out if an account is going bad or not. And there have been so many false alarms. Initially, and a lot of these false alarms have actually got converted into actions, which has caused a lot of market havoc also. But I think as we are also, we as humans are also understanding the technology and are getting better used to it, and therefore I believe that such risks could go down. But the holy grail here has to be that no matter whatever the machine gives out, that the output of the machine has to be validated by a human being for a longer period of time before it can be relied upon with full faith.
So just to extend this, as an end user, how do you see these innovations or these fintechs are going to be useful?
So I think, I don't know if this is the right example of a fintech or not, but to go back, Tally as an accounting software, you could possibly call was the first, was one of the initial tools which was at the cusp of technology and accounting, right? So maybe you could call it accounting tech or whatever. You could give it any name, right? Now that has moved forward with Zoho and Odoo and all these other, right, for finance. So for consulting organizations like us, which is 20, 25, 30 people, for us, these things are, FinTech, for the lack of a better word. And similarly for smaller businesses, the compliance software, for example, Tejendraji is here from TechNet, right? Their GST tool is one of the most strongest, robust, and most used tools here, right? So these things which can ease the load of compliance, which can ease the load of managing an organization, right? Because at the end of the day, if I have to keep one accountant or two accountants in my office to manage my books, vis-a-vis if I can move that to a tech platform and then I can utilize that money to actually bring in 2 more people who can help my business grow, right? So that is the kind of compounding effect or the leverage that FinTech can give to businesses.
I think on the same note, just to support, I think connected banking, which is like the banking which I used to do as a SME or MSME on a corporate or any of the banking platform. Now I can move it on to the tools like Tally or Zoho and what Esteemed is driving. And there are a lot of other digital public infrastructures are coming. Say, example, account aggregator. After for payment, maybe account aggregator or many more such modeling. I think that's how we will look at what banking we had done yesterday. When we used to go to the bank branch. Now banking is around us today. But tomorrow bank will come and before and tell me these are the early warning signals or these are the ways where you can raise the money. Oh, your business is going down. So based upon your financial model, you are not really performing well. So this is the loan available for you. I think that's how many more models are coming onto the connected banking or maybe as a FinTech banking or API banking. So ma'am, looking at this, sometimes it looks so wow. But all these news which keeps coming, like some FinTech has gone down or within a bank or so sometimes, like typically around cooperative banks. So they go down or their license goes off while they know how to operate banking or how to operate finances. So how do you see the future? While we have discussed yesterday, today, how do you see future here onwards and how regulators should look at supporting? Because the regulators are the one who are providing licenses, but they are the one who are taking out, maybe because of non-compliance. So how do you look at the futuristic approach so that it should be at least towards a greener, better risk handling and so on?
See, as I said, we have actually evolved a lot. So I don't have to go very back, too back in time. Just say 4 years, 5 years back. If any of you has been following the capital markets, you would have seen a spate of defaults happening, right? But as a learning from that, what we have done is as I told you, we have built up a lot of RegTech models around that from the learnings that we had. So a lot of reporting happening from the brokers. And basis these reportings, we are throwing out early warning signals. See, many a times what happens, intent is not wrong, right? It is not that the capital market intermediary or the FinTech intermediary is actually out there to do the wrong things. But as Gautamji was saying, it could be merely lack of control. It could be merely lack of processes which actually did not, make you see what was evidently going to happen, right? But with these regulatory technologies that we have in place, these kind of defaults, I feel, will definitely go down. See, I mean, particularly on the capital market segment because, I'm the first-hand witness. We are deploying a lot of technology for detection of early warning signals. So a lot of data is being churned so that on a timely basis, I can go back to the capital market intermediary and tell them, hey, something is not wrong with your books. Something is definitely wrong there and you should look at it. So these kind of defaults, I feel, with the help of technology will go down. Markets will become much more robust and provide much more better opportunities for the investors.
Yeah, I think good. I think we have discussed what is happening in the past, what is happening today, what could be the tomorrow, and ever say its customer is going to change, right? Customer, it could be a corporate or end user who will get the services from the banks or capital market. Eventually, it will be handled by fintechs. So I think here we are. So if there are any questions from the audience, we can take up. So if there are any questions, right? So maybe I think in interest of time, I think let's look at those some of the last remarks. Gautamji, how do you look at futuristically while FinTech has moved from 2014 to 2024, from payments to the lending to the financial markets and giving those good support from the end users to do the algorithm trading. I think this is the norm now. Those were the days where Zerodha was not existing. Now today they are the one of those better than and the largest than the existing ones. So how do you see how do you see will this continue again? Whether the capital markets or banks will lose out the pie because of these fintechs? What is your view? The last some of the remarks on the financial markets.
So I think I will, I have 2 points to make here. One is as a user. I think as a user and as a participant in the financial markets of India, I think FinTech is going to make the system much more robust. It's going to make the financial markets much more robust, much more reliable, and and is going to increase the access of the financial market. From a company's perspective, it is going to further strengthen the corporate governance practices. Because technology is going to become the driver of managing all your compliances. At the same time, answering the second part of your question, which is basically will the banks or the traditional broking houses lose the pie to the to these new age companies and fintechs. I think the way India is growing and the way the pie is expanding, I think everyone has room for growth, and there's room for everyone, and there's room for everyone to grow. But typically, how I'm perceiving this to move forward is that a lot of these fintech companies are on a cash burn model. So sooner or later, there will come a time. I mean, you can cut out the Zerodhas of the world because those are far and few. But the companies which are getting into lending or etc., a lot of those are either working on razor thin margins, wafer thin margins, or possibly could be in a cash burn situation. So therefore, there could be a time when a consolidation could happen, like we have seen in the e-commerce space, and this technology could get absorbed by a larger institution, and that could be a force multiplier.
Yeah, and at the same time, banks are also now improvising either by adding new people, new skill sets, better architectures, and regularly also pushing them to do the better banking, and whenever they are talking to fintechs, either integrating, do it in a better way. And when I say regulator, I think, ma'am, you will talk about more on this IFSC last, how they are really coming up and how they are helping fintechs to come there in the gift city, or how they are helping outside MNCs to come and set up their GCCs in IFSC.
Sure. So, as all of you would be aware, that GIFT IFSC is the maiden International Financial Services Center of India. So, the advantages that it offers to companies is that any entity that is set up in the GIFT IFSC enjoys a 10-year tax holiday out of a block of 15 years. That being one of the major advantages. Having said that, the other major advantage that GIFT IFSC offers is that it has a unified regulator. So unlike India, wherein you have different regulators, for capital markets you have to go to SEBI, for banks you have to go to RBI, for then insurance you have to go to PFRDA, right? So in GIFT City, you have a single regulator called the IFSC Regulatory Authority, and they are a very, very developmental regulator. I must give them credit for that. They are very open to new innovative ideas, and it is a true effort on all our parts, all the intermediaries that are operating in the IFSC. Our endeavor is to make GIFT IFSC, at par with the international financial centers like Dubai, Singapore, Hong Kong. And we are actually well on our way to do that. Just let me give you some statistics in terms of the number of intermediaries that are operating in IFSC as on date. So we have more than 100 odd alternative investment funds, which are called fund management entities in the international parlance. So we have more than 100 odd fund management entities. In terms of broking entities, we have more than 80 brokers, out of which around 55 brokers are active. That means they're trading. And I'm sure none of you would take a guess on the average daily volumes that we do at NSE IX. Anybody wants to take a guess What would be our daily average trading volumes that we would do on NSE IX? Just a random number. I mean, there's nothing to lose. So we are doing an average of 4 to 5 billion USD every day. And my last 1 year, my total turnover on NSE IX has been more than 1 trillion USD. And I'm sure, I mean, this is not even known to people. So we're actually doing a lot at GIFT IFSC. It is poised for very big growth, and I would urge all of you to at least visit GIFT City once, see it for yourself, and assess what are the opportunities that it offers to everyone.
Thank you so much for such a wonderful insights, ma'am, and as well as Gautam ji. I think this is with this note, we end this panel discussion. I think good to see what fintechs are bringing as one of those channels for the end users customer. And this will evolve, right? The way I see the fintech is one of the prominent entities, and they used to integrate point-to-point banks and capital market. Tomorrow's finance is completely open finance. Like what we have seen, open banking will become open finance. And slowly, with the help of regulators, it will be open data, right? I think it's evolving. Gone were those days we used to go to the bank branches, and now we are doing those automations or transactions on the fly. And even we will, businesses or corporates will do these transactions on the fly whenever we will be part of those digital currencies or central bank digital currencies. I think evolution keeps continuing based upon how customers are expecting how technology works. So thank you so much, Gautam ji and Bhawika ma'am, for being such a good panelist for this discussion. So if you have any more questions, we can open up or thank you.